Corporate taxes and double taxation. Each country has a different taxation system for individuals as well as for the different types of business entities allowed to exist in that country. The tax systems can be pretty simplistic with a fixed tax for everything, or they can be very complicated and complex with different tiers depending on the amount of salaries the business has to pay and the profits that the business makes. For the exact and specific tax laws in your particular country, if you are outside of the United States, please talk to a local accountant and do your own research. This section, just like the previous sections 4 and 6, are mostly following the United States laws, accounting and taxation systems. Even though you may be from another country, as I was when I first got exposed to the American accounting principles, and this may not be pertinent to you directly, but I still can think that it can be very educational to you, and it can help you navigate your local tax laws and requirements. In general, corporate taxes are much more complicated than taxes for pass-through entities like sole proprietorships, partnerships, or LLC, for a number of reasons, including the fact that, again, a corporation, it's a different entity than the owners. Also, not all corporations are treated the same. An S-corporation is the same as a C-corporation in many aspects, but not when it comes to taxes. A regular or C-corporation must pay taxes itself, while an S-corporation, it's a pass-through entity for tax purposes and doesn't pay any income taxes separately from the owners. As a separate tax entity, a C-corporation must file and pay income taxes on its own tax returns, much like an individual does. After paying employee compensations, fringe benefits, operation expenses, and all other reasonable and necessary business expenses have been subtracted from the earnings, a corporation pays tax on whatever profit remains. In small corporations, where all of the owners of the business are also the business employees, all of the corporation's profits are often paid out in tax-deductible salaries and fringe benefits, therefore leaving no corporate profits, which also means no corporate taxes are due. There may be no corporate taxes, however, the owner/employee still must pay income tax on their salaries on their individual tax returns, unless they live in Florida and there is no income tax. So again, do your research in your own state. Each state is different, not to say that each country has its own laws. The Tax Cuts and Jobs Act of 2017 brought in a major change and simplification to corporate taxes in the United States, replacing 8 tiers of rates ranging from 15% to 39%. It replaced all that with just one fixed tax percentage for all corporations, 21%. This is significantly lower, plus much simpler structure, which may make a C corporation more attractive to even very small businesses. Let's talk about double taxation. This type of taxation, it's applied to larger corporations with shareholders who are not active employees in that corporation and who receive dividends from the business, not salaries or bonuses. These dividends paid to shareholders cannot be deducted as business expenses from corporate earnings. Therefore, the dividend amounts are included in the total corporate profits and they are taxed. When a shareholder receives the dividend is taxed at the shareholder's individual tax rate as part of his personal income. So you can see that any money paid out as a dividend gets taxed twice, once at the corporate level and once at the individual level. So how can you avoid this double taxation? Simple. As a corporation, don't pay dividends. Or you can opt for an S-corporation tax instead. If you want to have your entity formed as a corporation, but you want to avoid many complications coming with running a corporation, you can look into an S-corp. Like I said in our previous lecture, S-corporations are pass-through entities, and they do not pay taxes themselves. Any profits will pass through to the owners, who pay taxes on their income, just as if the business was a sole proprietorship, a partnership, or an LLC. So make a big distinction between C Corps and S Corps, right? Even though they are corporations, the C corporations will be subject to double taxation if they pay dividends to their shareholders. And many of the big corporations, big name businesses that we know do that because that makes sense to them and they can afford it. Also, when they donate things to charities, when they invest in research and development, the government gives them some, tax cuts, some tax deductions. So for them altogether, that makes sense. But then we also have the S corporations. The S corporations, even though you get the liability protection that a corporation offers you, so you are not you and your business as one and the same. Your business, it's your business. It's like a different physical entity. It's not physical, it's legal because it exists only on paper. You cannot touch it, right? But it's a different entity than you as an individual. So S Corp or C Corp are both different than the individual. So is an LLC. But from tax perspectives, only the C corporation pays its own taxes. Now they all file their own taxes. You file their own taxes, but they do not pay their own taxes. Only C corporations pay their own taxes. S corporations, on the other hand, they provide you the liability protection, but it's a pass-through taxation, meaning that if you are taxed as an S corporation, the profits from the corporation pass through to the individual owner's levels, and the individual owner pays taxes on that profit, or assumes the loss if the profit, it's not the profit, it's actually a loss for that S Corp. So I hope this makes sense. So again, I'm gonna repeat it because it's very important. We have, from a tax perspective, we have entities which are the same as individuals. So sole proprietorships and partnerships are the same legal entity as an individual. Also, the taxes are passed through. Whatever the business makes, the individual pays at its individual tax level. And then we have LLCs and corporations. The LLCs and corporations are legally different entities than their human owner that owns the businesses, right? However, from tax perspectives, only C corporations file and pay their own taxes separately from the human owner. The LLCs and the S corporations pay taxes like pass-through entities, and they do it at the individual owner level. So there are three aspects, and also you have to determine, to make the difference between legal and tax. So I hope this makes sense. If not, please download your resources, read it again, and I'm sure it will all come together.